Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. Let's take a look at the stories for the day. Union Telecom Minister Ashwini Vaishnaw recently said that over the top or OTT communication services like WhatsApp and Telegram will fall under the ambit of the draft telecom bill. But at the same time, the minister also said that the regulation will be light touch. So, does this mean India has figured out how to regulate such apps?
The draft Indian Telecommunication Bill 2022, when it was released for public consultation in September, had raised fears that its scope went beyond telecom issues and pointed to the return of license Raj under the Department of Telecommunications. Much of the controversy is around the broad definition of telecommunication service. It included, among others, email, broadcasting services, video and data communication services, OTT communication services such as WhatsApp, and interpersonal communication services. The definition of message was broad too. An industry insider had told Business Standard that e-commerce, banking, gaming, and social media apps, as well as any platform where there is two-way messaging, will come under the definition, requiring a license. Telecom companies have argued that OTT communication services are usurping their SMS and voice call businesses and therefore should be licensed just as they are. The definition was amended after telecom service providers such as Airtel and Reliance Jio said that they require a level playing field as OTT communications and satellite-based services offer audio and video calls and messaging without paying for license or spectrum. OTT players, meanwhile, said they use telecom networks to offer value-added services for which telcos get paid by the customers based on the latter's data utilization. Plus, they are already regulated under the IT Act as intermediaries. The bill, in its current form, empowers the government to direct service providers to intercept, detain, and disclose messages sent through these channels in the case of an emergency or in the interest of public safety. This can undermine the security benefits of end-to-end encryption because the government will have the power to intercept messages compromising user privacy. However, Telecom Minister Ashwini Vaishnaw has recently said that the government will only introduce light touch regulations for OTT communication services such as WhatsApp, Signal, and Telegram, keeping consumer interest and cyber fraud issues in mind. The Telecom Regulatory Authority of India, or TRAI, was also not in favor of regulation of OTT service providers, sources had told Business Standard. The telecom regulator had shot down proposal for OTT regulation in 2020 as well. A report in a financial daily on Monday said that OTT apps may not require licenses to operate in India, but will have to step up user protection. A consensus that user protection must be prioritized has reportedly emerged from the discussions between the government and the stakeholders on the draft telecom bill. The report said that various stakeholders will continue to discuss the light touch regulations for the OTT communication platforms.
This new suggestion in terms of balancing industry concerns as well as regulatory concerns, while it doesn't mean that the government is putting the encryption regulation or interception at the back burner, it simply means that the government is not highlighting concepts like interception in a big way in the current telecom draft telecom bill. As it is even now, the government has access to your WhatsApp communications, and there is always a backdoor provided by these players. They have done this in other countries as well, so US and other jurisdictions. That is going to be always there. That is not something that is new. I think in future, it could be that the government may further introduce regulation which could specifically require some of the other new technologies to be made available for interception facilities. They're adopting a more of a stepped approach rather than, going all out in one go.
Telecom Minister Ashwini Vaishnaw has said the new telecom bill is expected to be in place in the next 6 to 10 months, but the government is not in a hurry. While OTT communication players may have reason to rejoice, questions around privacy and how far the government can go in the name of security remain. In future, regulations may have to revisit these aspects of the digital world.
The government also wants to introduce transparency in judicial appointments. It claims that appointments and transfers in the judiciary have been opaque. But the Supreme Court too has been holding its ground, saying that scrapping the Collegium System will compromise its independence. Let us delve deeper into the debate.
So, what exactly is a Collegium System? It is a system through which judges are appointed and transferred in the Supreme Court and High Courts across the country. In the Supreme Court, a group of 5 senior-most judges, led by the Chief Justice of India, decides on all the appointments and transfers of judges in the Apex Court. These appointments include elevation of High Court judges to the Apex Court and direct appointments of senior advocates as Apex Court judges. High courts have their own collegiums, comprising the court's Chief Justice and 2 senior-most judges. It only makes recommendations for appointments. A final decision about appointing High Court judges is taken by the Collegium of the Chief Justice of India and 2 senior-most judges of the Supreme Court. According to Article 124 of the Constitution, judicial appointments to the Supreme Court must be made by the President in consultation with India's Chief Justice and other senior judges of both the SC and High Courts. While Article 217 says that appointments to the High Courts should be fixed by the President, CJI, and the governors of states. The Collegium System has for long been a bone of contention between the executive and the judiciary. Union Law and Justice Minister Kiren Rijiju recently alleged that the Collegium System was opaque, and it was the government's job to appoint judges. The NDA government had passed the National Judicial Appointment Commission (NJAC) Act in August 2014 through the 99th Constitutional Amendment of Article 124A. The then law proposed a group of CJI, the 2 senior-most judges of the SC, the law minister, and 2 eminent people in place of the Collegium. The NJAC had given the veto power to the CJI and other 2 senior judges in any appointment. It had also stipulated that the CJI would need the support of the other members of the commission, but the Apex Court on October 16, 2015 struck down the 2 laws related to the formation of NJAC, terming them unconstitutional.
To put my opinion on this very clearly upfront, I think the Collegium System should be disbanded. But the overall purpose of the Collegium System of appointments was to protect the independence of the judiciary. And let me just say that it has been a spectacular failure in doing so. The Collegium System has not been able to prevent the union government from picking and choosing nominees and appointing them at will, from rejecting nominees out of hand and not having any pushback, and simply ignoring some of the nominations that the Supreme Court Collegium has sent in the context of both High Court and Supreme Court judges. Secondly, I think the Collegium System has created new problems. The Collegium System has entrenched the hold of certain privileged castes and classes over the higher judiciary in the country.
The debate around the Collegium System is long-standing. The Supreme Court gave 3 decisions on this matter. In the first case of 1981, SP Gupta versus Union of India, the Supreme Court ruled that the President can turn down the recommendations of the CJI. In the second case, Supreme Court Advocates on Record Association versus Union of India in 1993, the Apex Court overturned the judgment and upheld the primal role of the CJI in appointing judges. The SC reiterated its stand in 1998, responding to a query by then President K.R. Narayanan about the role of the Collegium. Law Minister Rijiju wants to reintroduce the NJAC, saying that the Collegium system is not correct, not transparent, and not accountable. Rijiju is not alone. There are other proponents for overhauling the system. Some experts believe that while major changes are necessary, the Collegium should not be completely scrapped. Let us listen in to Senior Advocate Sanjay Hegde.
Do we do away with the Collegium system? I think not. The doing away with the recommendations of the judiciary or giving the judiciary a dominant voice in appointments will lead to, again, the law minister and therefore necessarily the prime minister or the chief minister having a extreme stake in judicial appointments, and particularly in cases of very strong governments, these governments dominating the process of appointment.
And any reform will require time and rigorous engagement from both the judiciary and the executive.
Completely do away with the collegium, you would need a constitutional amendment, and a constitutional amendment would possibly be challenged in the Supreme Court. There was a previous attempt by the Modi government as soon as it came in to do away with the collegium and bring in the National Judicial Appointments Committee. That was struck down by the Supreme Court. So unless you come out with a procedure which, having taken into account the previous judgment of the Supreme Court in the NJAC case, it restores primacy of the judiciary in judicial appointments, and at the same time makes for some kind of broad-based inclusion of others. I can't see any formal way of doing away with the collegium without a constitutional amendment.
But Prasanna Kumar believes there needs to be a third stakeholder in the reformation process.
Now, the problem is when there are only 2 stakeholders, there will inevitably be conflict. And the conflict might be one by one or one by the other, but it will be one of conflict. If we make it 3 stakeholders, I think there will be a possibility of much greater balance. And the third stakeholder that I would like to put into the discussion is the bar and civil society, that they will represent in some ways the views of the people who are not directly within the system, the people who are the beneficiaries of the system. I do think in terms of who should be involved, any future system has to, of course, involve judges, has to necessarily involve the government, but should also involve the bar and civil society.
Evidently, the collegium system needs reforms. The long history of the politics surrounding the debate between the judiciary and the government means that the process will require all stakeholders to come to a mutual understanding.
After the corridors of courts, let us shift our focus to the realm of financial markets. 4 firms are looking to raise over 4,000 crore rupees this week via IPOs. Among them, DCX Systems and Bikaji Foods International are already seeing increased investor interest in the grey market. But is the grey market buzz worth it? Which one of these IPOs deserves your money? We find out in our next report.
This is going to be one of the busiest weeks for primary market investors in a long time. A relay of 4 initial public offers kick-started yesterday, with cables and wire harness assemblies manufacturer DCX Systems launching its public offer. The 500 crore rupees IPO was subscribed 2 times on the first day of the issue, supported by retail investors. DCX IPO will be followed by that of Fusion Microfinance, which will run between November 2 and 4. Fusion Microfinance has fixed a price band of 350 to 368 rupees per share for its 1,104 crore rupees initial public offering. The issue will have fresh issue worth 600 crore rupees and an offer for sale of 13.69 million equity shares. Later in the week, the IPOs of Global Health and Bikaji Foods will open for subscription on November 3 and close on November 7. While Global Health Limited, which operates and manages hospitals under the Medanta brand, has set a price band of 319 to 336 rupees per share for its 2,206 crore rupees IPO. Confectionery and savouries company Bikaji Foods has set its price band at 285 to 300 rupees per equity share. It aims to raise around 900 crore rupees via an OFS of 29.37 million shares. Together, these 4 companies are expected to fetch around 4,100 to 4,500 crore rupees. Experts say this litmus test for the IPO market, which has remained subdued this year, may push the revival button.
I think it is the beginning of another revival. There will be a solid revival of the primary market from November onwards. Because I believe that the rate cycle is, we are peak and global markets are going to recover and the Indian market has recovered. It will continue. The only issue is oil price. If crude oil goes above $100 substantially, then it will correct. Otherwise, both secondary market and IPO market check for another solid recovery.
Only 22 companies have floated their IPOs in the first 10 months of 2022, raising over 44,000 crore rupees. By comparison, 63 companies raised over 1.2 trillion rupees via IPOs in 2021. So, which of the latest 4 IPOs are worth investors' money?
Talking about DCX System, we are recommending subscribe to this issue as it has already opened for subscription on 31st October. We are recommending subscribe both for the listing gains as well as long-term perspective. Company being among the preferred Indian offset player for the defense and aerospace industries has global accreditation and they are technology enabled and scalable end-to-end capabilities makes it an attractive issue. Second issue which will be opening for subscription from 2nd November is Fusion Micro. Fusion Microfinance Limited provide financial services to underserved women across India in order to facilitate their access to greater economic opportunities. Company's focus customer segment is the women in rural areas with an annual household income of up to 3 lakh rupees. We are recommending subscribe to this issue as well, as this issue is coming at a price band of 350 to 368 at a price to book multiple of 1.84x. Company being well diversified and has extensive pan-India presence with a strong rural focus is looking strong to us and we are recommending subscribe to this issue also. The third issue which will get open for subscription from 3rd November 2022 is Global Health. Global Health is one of the largest private multi-specialty tertiary care provider operating in the north and the east region of India. The company is bringing the issue at a price band of 319 to 336 per share, which turns out at the EV EBITDA multiple of 18x and the EV by sales multiple of 4x. We are recommending subscribe to this issue also because the company is having a large scale hospital with sophisticated infrastructure and they have a strong track record of operational and financial performance.
Meanwhile, apart from the IPO market buzz, auto sales data, manufacturing PMI data, and Q2 results season will guide investors today. Adani Ports, JK Tyres, LIC Housing Finance, Nykaa, Punjab National Bank, Tech Mahindra, and Varun Beverages are among the major companies due to report their numbers.
Companies go to the primary market to borrow funds, which they use for expansion and other activities. And in this process, new securities are created. But ever wondered how new cryptocurrencies are generated? We answer this in the next segment.
all the cryptocurrencies, Bitcoin is the oldest, the most popular and expensive too. First created in 2009, its price has been on a roller coaster ride since then. It had hit a low of $4,107 in 2020 and touched an all-time high of $68,790 in November 2021. On October 31st, the price of one Bitcoin was $20,466. People can also purchase a fraction of the coin. Like stocks, trading in cryptocurrencies too is full of risks. And unlike securities which are created in the primary market, generation of cryptocurrencies is quite a complex process. Most of us purchase a new cryptocurrency, for example Bitcoin, from the existing lot. But how are the new coins generated? The process behind this is known as cryptocurrency mining, and not everyone can do it. It is a domain of experts, and they get coins as a reward for their labor, which is painstaking and involves solving very complex mathematical problems. It is done to make sure that coin generation is limited, the way RBI keeps a check on the new currency creation. Bitcoin mining is the process of creating new bitcoins by solving extremely complicated maths problems to verify transactions and add them to the blockchain ledger. Blockchain is a distributed ledger and information in it is stored in a way which makes it very difficult to hack. When a Bitcoin is successfully mined, the miner receives a predetermined amount of Bitcoin. As part of putting new coins into circulation, mining also helps secure the blockchain and verify transactions. Here's what it means. Cryptocurrencies such as Bitcoin, Solana, and Monero are virtual currencies, which means they exist only electronically. There are some of the well-known currencies among the more than 20,000 that are currently in existence, with more being created every day. New blocks can be added to a blockchain through a variety of mining mechanisms. For Bitcoin, new blocks are added to the blockchain through a proof-of-work algorithm. Under proof of work, miners across the world who are seeking to add a block to a blockchain are presented with a difficult mathematical problem or a puzzle. The miners' computational resources are deployed to arrive at a solution. Once the problem is solved, other users can validate the solution and confirm the block, adding the next block to the chain. In the case of Bitcoin, miners who create and publish new blocks are rewarded with Bitcoin. Bitcoin is rewarded on a first-come, first-served basis, meaning whosoever solves and publishes the solution first is rewarded with Bitcoin. Miners throughout the network compete against each other in a race to be the first to solve the proof of work and earn the reward. A miner currently earns 6.25 Bitcoins for successfully validating a new block on the Bitcoin blockchain. The Bitcoin blockchain was created anonymously with a final limit of 21 million coins, of which about 19.08 million have already been minted. The last Bitcoin is expected to be mined in 2140.
By the nation's trusted bank, SBI, the banker to every Indian.
Bitcoin consumes around 110 terawatt hours of electricity per year. It is roughly equivalent to the annual energy consumption of small countries like the Philippines or Malaysia. That's all for today. Catch the next episode of The Morning Show tomorrow. Bye-bye for now.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.